Hey folks, it's Simon here with your Tao Daily video for Thursday the 30th of May 2024. Today I want to talk about market breadth. It's something I get a lot of questions on. Market breadth refers to the overall health of the stock market measured by the number of stocks that are rising or in uptrends versus those that are falling or in downtrends. So in simpler terms, looks like looking at the trees in the forest rather than just the overall forest. All right. So if you think about the market as a whole as a forest, what we're doing is we're walking into the forest and looking at how many of the individual trees are thriving. So if you think about a healthy forest, that's one where most of the trees are green and growing and thriving. And so the same for a stock market. A healthy stock market is one where most of the stocks are green or rising. More are rising in price than falling in price. Now, an unhealthy forest would be one where it might look okay from a helicopter, but when you get inside, a number of the trees are sort of brown and withering. And to draw that analogy to the stock market, it would be where a large number of stocks are falling or in downtrends. Now, there are a number of ways you can measure market breadth, and different people will use different measures depending on what sort of story they're trying to sell you. Some of the popular ways of doing it, well, one is the advanced decline line. All right, and this is a very simple measure. It just counts how many stocks have gone up in price, that's the advances, versus how many have gone down, the decliners, on a given day. And then the line gives you a cumulative total. And so long as this line is basically copying the stock market or the S&P 500, that's a healthy market. If we scroll back to late 2021, early 2022, we had a divergence in the advanced decline line. All right, so what we had was the S&P 500 making new highs, but the advanced decline line was making a lower high. So that was a warning, and that actually preempted the big sell-off that we had in 2022. So what are some other measures of market breadth? Well, another popular one is the percentage of stocks above their 50-day moving average. The 50-day moving average is the line in the sand between a medium-term uptrend and a medium-term downtrend. Now here we've got a bearish divergence. S&P's made a new high. The percentage of stocks trading above their 50-day moving average is making lower highs. And yet another one is the percentage of stocks trading above their 200-day moving average, which is the line in the sand between a long-term uptrend and a long-term downtrend. Here we've also got a slight bearish divergence. Again, S&P made a new high. Percentage of stocks trading above their 200-day moving average has been making lower highs. Another way of looking at market breadth is just simply comparing the S&P 500, which is market cap weighted, with RSP, which is the equally weighted S&P 500, and you can see that not only did this one not make a new high here, it's rolling over pretty hard. All right, so that shows you that the smaller stocks, which get an equal weighting in this index, are performing at much worse than the bigger stocks. And another thing we can look at is this. This is my Magnificent 7 index. This is the sort of weighted basket of the Mag 7 stocks. That's at all-time highs. So this is just another way of seeing that market performance is very concentrated in a handful of big stocks. So that's a quick lesson on market breadth. I hope it helps, and I'll catch you on tomorrow's update. Thank you.